Hello everyone, my name is Brook Seifu. I am a junior in the AIM program covering domestic industrials. I hope you and your families are doing well during this time. Today, I'll be pitching ITT Inc. Before I proceed to my pitch, I would like to share you my screening process. I was searching for a company with a stable cash flow, strong balance sheet, and a well-diversified revenue streams to withhold this upcoming crisis. ITT Inc. is a diversified manufacturer of highly engineered critical components and customized technology solutions for the transportation, industrial, and oil and gas markets. The company operates under three main segments. Motion Technologies, which represents around 44% of total revenue, delivers brake pods, shock absorbers, and damping technologies mainly to the automobile, transportation, and rail industry. Second, Industrial Process, which is about 33% of total revenue and provides engineered fluid process equipment, efficiency solutions, and aftermarket services to customers in the oil and gas, mining, and infrastructure-oriented industries. Last, Connect and Control Technologies, which is about 23% of total revenue and supplies electronic connectors, valves, noise absorptions, mainly to the aerospace and defense industry. The company earns 45% of its revenue from the Americas and 55% from the EMEA. The company was founded in 1920 and is headquartered in White Plains, New York. Now moving on to my recommendation. ITT is a global manufacturer that owns well over 20 brand portfolios with presence in over 125 countries. The company is set to benefit from the $9 trillion global infrastructure investments and additional projects which are expected to be implemented to revive the upcoming economic downturn. This past year alone, ITT recorded a very strong financial performance that led to a 4.5% revenue growth. The company returned almost $95 million to its shareholders in the form of dividend and shares repurchase program. In addition, management has promised a new shares buyback program, which would worth over $500 million. When it comes to crises like COVID-19, ITT is well prepared to survive by using its strong balance sheet, which have over $1.2 billion in cash and cash equivalents. I believe this is a very great time to buy ITT with the stock nearly down 40%, a very profitable company, and very attractive price to get a massive dividend return. Now I'll move on to my drivers. The first one is demand for friction brake. ITT's motion technology segment is well suited to benefit from the global friction brake market, which is expected to be around $47 billion by 2023. Their aftermarket brake products and solutions will offset their headwinds from auto industry shutdown. The reason why I say this is we're expecting economic downturn. Consumers are not expected to buy a new vehicle. However, they're expected to maintain their vehicle safety and buy aftermarket brakes. With a global market share of 25%, a key strategic locations in North America and China, ITT's motion technology segment is set to achieve a 7% segment revenue growth in the year 2021 and 2022. Now I'll move on to my cost reduction. To expand future operating margins, ITT is implementing initiatives to improve their shop floor management, increase critical equipment efficiencies, and redesign their capital-intensive products. They're also transferring facilities from high-cost regions like Europe to Mexico and China. These efforts are expected to increase annual operating margin between 50 to 100 basis points in all three segments. These initiatives would also position ITT to capture additional incremental revenue. Moving on to my third driver, which is strategic acquisitions. This past year alone, ITT acquired RPG and Matrix Composites, which contributed around $54 million to ITT's net revenue. The companies need to expand their presence on niche end markets as well as their geographical presence. Similar acquisitions like RPG and Matrix can contribute around 1 to 2% on ITT's revenue. In addition, the current COVID-19 will open the door for ITT to utilize their strong balance sheet and acquire fragmented competitors and accelerate their market share gains. Now I'd like to move on to my valuation. In order to reach an intrinsic value for ITT, a 5-year DCF model was constructed using a terminal growth rate of 1.5% and a WACC of 7.44%, resulting in an intrinsic value of $67.61. A sensitivity analysis of plus or minus 50 basis points on the terminal growth rate and a WACC was performed, resulting in a price range from $55.02 to $98.84. A PE relative valuation was conducted with a multiple of 16.57, resulted on intrinsic value of $60.63. Lastly, an EV/EBITDA relative valuation was conducted with a multiple of 9.71 and resulted in intrinsic value of $65.22. By weighting the three models, 60-20-20, a price target of $65.22 was reached with a potential upside of 42.56%. ITT pays 92 cents dividend. Now I would like to go over my risk, COVID-19. The coronavirus pandemic is a major risk that can impact ITT's revenue streamline. In addition, supply chain disruption, operation shutdowns, and substantial decrease on consumer demand can impact near-term revenue growth. Potential economic downturn can hinder the growing demand from the commercial aerospace industry. Moving on to my second risk, oil and gas exposure. ITT generates approximately 21% of its revenue from oil and gas, chemical and mining industries. Customers in this area are primarily profit-driven, and they tend to delay capital projects and maintenance, which could potentially shrink the demand for IT's products and services. Lastly, asbestos liability. Pending asbestos liability and claims are estimated to be filled over the next 10 years. Currently, ITT have around $430 million pending asbestos liability, and failure or additional claims can hinder ITT's balance sheet and additional cost. Now I'll move on to my management. Lucas Harvey is the president and CEO of ITT. He have held numerous positions in companies like Fiat Group, Royal Dutch Shell, and Honeywell International. What's unique about ITT's management team is their leadership is based on geographical presence. Since they have around 20 different brands and portfolios, they have assigned different managements on different geographical areas, which I believe is very key for their operational success. And Thomas Kilera is the vice president and the CFO of ITT. First, I would like to say thank you all for taking your time to view my presentation. I believe ITT's wide array of product mixes, diverse customers, operational facility in different geographical areas, and very solid management team will enable them to navigate this critical period in our world. Therefore, it's recommended that ITT be added to the AIM Small Cap Fund with a price target of $65.22, representing a potential upside of 42.56%. Thank you. Have a great day.